Hey there. Today we're digging into a classic debate that still is heating up in 2025. Real estate versus stocks. Which one's the better investment this year? Whether you're a renter wondering if it's time to buy or a stock investor eyeing that for sale sign, today's episode is for you. Let's dive into the pros, cons, trends, and strategies to help you decide what's best for your money in 2025. Welcome to Personal Finance Cat, where I share my personal take on personal finance. Real estate in 2025. What's the deal? Real estate has always been seen as the American dream, but is it still a dream in 2025? Here's what's happening this year. Interest rates are still hovering in the 6 to 7% range, higher than pre-pandemic levels. Inventory remains low in many markets, but some cities are finally cooling off. Rents are stabilizing, but still high in metro areas. Short-term rental markets, like Airbnb, are saturated in some cities. So, if you're looking to invest in real estate, you'll need solid financing, good cash flow projections, and a plan to ride out potential dips. Stocks in 2025. What's new? The stock market in 2025 is lively, to say the least. Here's what we're seeing. The S&P 500 is rebounding after tech-led volatility. AI and green energy stocks are still hot, but facing regulation and correction cycles. Index funds remain the safest bet for long-term investors. ETFs are growing more specialized, targeting everything from space tech to water utilities. The bottom line? The stock market remains one of the most accessible and liquid investment options, perfect for people who don't want to worry about tenants or toilets. Now, let's compare real estate versus stocks. Let's pit these two giants against each other, category by category. 1. Accessibility. Stocks are easy to start with as little as $5 through apps like Fidelity, Robinhood, or SoFi. Real estate, on the other hand, requires larger upfront costs, including down payments, closing costs, and maintenance. So the winner in terms of accessibility is stocks. 2. Passive income. Real estate can provide monthly rental income, but you might be dealing with maintenance and management headaches. For stocks, some of the dividend-paying stocks and REITs offer passive income, but usually at lower monthly returns. So the winner in terms of passive income is real estate, if you have good property management. 3. Appreciation potential. Real estate has steady appreciation in the long term, but it's very much local market dependent. Stocks historically offer 7 to 10% annual returns if you stay invested long term. The winner when it comes to appreciation is stocks for long-term hands-off growth. 4. Risk and volatility. Real estate is slower moving, hence less risky, but it's subject to local market crashes, property damage, or tenant issues. Stocks, on the other hand, are volatile, but historically resilient over a long period of time, like decades. When it comes to risk and volatility, it's a toss-up. It depends on your risk tolerance and time horizon. 5. Last but not least, taxes and deductions. Real estate offers tax benefits like depreciation, mortgage interest deductions, 1031 exchanges. Stocks are tax efficient if you hold long-term to avoid high capital gain taxes, but fewer deduction perks. So when it comes to taxes and deductions, the winner is real estate. So which is right for you? Here's my suggestion. Choose real estate if you want to build wealth with leverage, aka mortgage. You like tangible assets. You're ready to manage or outsource property maintenance. You want consistent cash flow. Or choose stocks if you want low barriers to entry. You prefer hands-off investing. You value liquidity. That is, you can sell fast if needed. You're investing for long-term growth or retirement. Now, of course, we have to talk about combining both. Here's the catnip truth. You don't have to choose one over the other. You can, for example, invest in REITs or real estate investment trusts to get real estate exposure through stocks. Or use stock market gains for a real estate down payment. Or diversify between long-term rental property and an ETF portfolio. Here's the punchline. Diversification is still queen in 2025. So there you have it. Real estate versus stocks in 2025. Each has its pros and cons, but the best one is the one that fits your goals, budget, and lifestyle. If you enjoyed this breakdown, don't forget to subscribe and leave a review. Until next time, keep your portfolio purring and your spending in check.